We have much more on a very active market day. Let's bring in our next guest. We want to find out if investors can look forward to more of the same tomorrow. We have a David Abella, the portfolio manager at Rochdale Investment Management, and also Dennis Hynes, chief market strategist at RW Pressprich. Gentlemen, good to have you with us on Bloomberg. Dennis, let me begin by putting it to you. Is this the beginning of something serious that we need to worry about in terms of where the stock market goes, or is this normal in a pattern of a bull market and we're going to get these pullbacks, people take some profits, and it's time to jump back in?
I don't know for certain, okay, but this was well anticipated, and I say well anticipated. It was a week or so ago, November 8th, when we had seen that after the great news that we've had with respect to the Republican House, good jobs report, better than expected QE2, if you will, 600 million versus 500 million, it seemed easy that the market would penetrate the 1, 2, 3, 4 go level on the S&P futures. Now, of course, the S&P 1234 level is this 61.8% retracement level. Having not gotten past that, we had advised clients on November 8th to consider taking profits. Now, things stayed fine until this past Monday. We then advised caution 2 days ago. Caution for the following reasons. One, the market was prepared for a breather after being up 18%, but then China, Australia, India, Brazil, the engines of growth were raising rates, so they were trying to cool their economy. The last straw is that we had the AAII, American Association of Individual Investors, with a reading at 57% bullish.
Too bullish.
Too bullish. It meant that individual investors were all in, if you will, and there was no place. They had nothing to do. There was no firepower to get prices to go higher. As a result, we issued a secondary caution to sell the market. That was 2 days ago.
All right, so good call there. What happens next?
Now is what we have. We expect to see now after today's PPI numbers, which means that we show a negative inflation from today's PPI, then it means that Mr. Bernanke's plan is not working. He's trying to generate inflation. He got just the opposite. So QE2 will be emphasized. I know they're arguing against it, but QE2 will be emphasized. Buy gold. Okay, don't buy the 10-year because there's no room for it to go. Buy stocks, but we'll tell you where.
All right, David, what do you think? What's going on in the market right now? Does that make sense?
Well, that makes sense, and maybe in much simpler terms, as the market had gotten a bit ahead of itself, had gone up, and was basically due for a correction. There's definitely various bad news out there, whether it's international or in the U.S. We're still in a very slow growth, high unemployment economy that is improving, but not at the pace anyone wants. So there's always going to be these hiccups along the way. I'm still long, still bullish in the right kind of stocks. I'm interested in value stocks. I'm interested in things that can grow in a better economy. I think you have to be a little more careful. A lot of stocks and a lot of assets have gone up, maybe gotten a bit ahead of themselves.
All right, we're going to talk about Walmart as one of those stocks, because in that report today, it turns out, of course, the United States for Walmart not doing very well, but overseas markets doing very well. David, what about Walmart today? Because I know that you've been focusing on the shares of the company coming out and saying, you know, the U.S. sales, comp store sales, not that great, but overseas, the business is really pretty good. And you're saying if people would just start to recognize Walmart's potential overseas, you'd have a different picture of the stock.
Well, that's right. I mean, Walmart's always done pretty well overseas, and it's always been around 20% of their business, but it really was always overlooked. How's the core business doing? It was, and then there's still a lot of focus on the core U.S. business. But I think what's happening is the international business, a lot of blocking and tackling, it's still doing well. And now it's the new theme is U.S. retailers getting more and more overseas. It was announced that the Gap is now opening a location in China, and everyone wants into these overseas markets. Walmart has a great head start, a great name, great logistics. So I think it could be a driver of things, and then that coupled with if they can ever kind of get their hands around the comps and get them a little more positive, because we know that the expenses are under control, I think it's a great value stock, and I think it's a good recipe for a decent investment after some disappointment.
Is Walmart ever going to get its hands around the internet? I mean, they seem to be trying to compete against Amazon.com. Is it possible that Walmart can put together a coherent internet strategy and execute it?
Well, they certainly can do better than they've been doing, and they have now a promotion of having free shipping, and that will help get a little bit of a head start. The website's just not quite the same as Amazon. Having used both, I mean, I would prefer Amazon. Amazon is the real leader there, but Walmart can certainly be doing better in that department, and they can leverage off of, hey, you can pick something up at a bricks and mortars location. That is pretty convenient. So I think they can certainly do better. I don't think they'd ever overtake Amazon. Dennis
Hynes, turning to different industry groups, which industry groups do you want to be focused on if indeed this is just a 1 or 2 day event in terms of the sell-off in the market?
The same industry groups which have gotten us where we are, and that is consumer discretionary. Stay away from things like utilities and some of the defensive sectors. So I think what you need to do is...
Commodities, would you be investing more in commodities? Take this as an opportunity to buy shares?
Absolutely. I think what we need to do is see a pullback in commodity prices. But I think, again, we have to see how far China and some of its growth countries are with respect to pushing interest rates up. But nonetheless, yes, they are still the engines of growth, and yes, commodities are to be purchased in any kind of a pullback.
All right, I want to thank you, gentlemen, very much. Dennis Hynes joining us from RW Pressprich, David Abella joining us from Rochdale. Appreciate your thoughts, gentlemen.